Okay, we are going to talk about buying in a high-rise building, investing, buying to live. They mainly consist of two categories. It's co-ops or cooperatives or condominiums, and the short version of it is condos. You all have seen high-rise buildings, whether in movies or in real life in Manhattan or other parts of New York City, also in Miami. So those big buildings obviously consist of smaller units. And once you become a unit owner, you either now bought shares of a co-op or you become an owner of a condo unit. So we're going to talk about commonalities of those two things, also how they differ, and also how it is different from buying, let's say, a single family home or a multi-family home. Let's begin. I'm Robert Niyazov. Okay, let's start with the co-op. So co-op, the big difference, you don't actually own real estate as it stands. You buy shares in the cooperative, okay? As well as other unit owners, you will become a shareholder. So you can vote with your proportionate shares. Features of the co-op: usually, compared to condos, it has cheaper price. However, there are a lot more restrictions, especially when you try to rent it. For example, you start living there, a few years later you want to upgrade or move to another city and you decided to rent. It's a lot more difficult to rent because people need to go through a process of approval. Also, when you buy, there is also something called board approval. That is a additional layer, meaning certain individuals who live in the co-op, they get together and they will see if you and your family members will be a good addition to that cooperative. Maybe it's not a bad practice, but if they refuse you, if they decline you, they don't even need to tell you why. Not only this, there is another, disadvantage of a co-op where to qualify to pass that board approval that I just mentioned, the requirements are very strict. There are some co-ops that are very strict, there are the less stricter, so you will need to do that research. But a lot of people ask me, should I buy a co-op or not? It's definitely better than renting, if you ask me. Is it an ideal investment for a future as far as your place to live? No, but if that's the alternative, with the renting, that's definitely better. So that is the co-op. We're going to move to condo as I promised, and then we're going to compare other things. So let's now talk about condos. So condos, here, majority of condos that we know, and it's not the only one, is also high-rise building. 50, 70 stories, 30 stories, could be 6 stories. But now, let's just say take a six-story building, and on each floor you have 6 apartments. So you have 36 apartments in the building. So each unit owner now owns one unit, and that unit actually is real estate. You pay real estate tax on it. The government comes and assesses, each unit. So it's treated as real estate. It's obviously has advantages of real estate compared to the co-ops that we discussed previously that only is shares. It's a lot easier to get in. You don't have, even though you have an application for the board, there's also a board, it's not usually as strict, and many times there's no even interviews. You submit the paperwork and they decide whether you qualify or not. So those are little things that every future home buyer or investor should know, okay? And I promise to talk about the differences between co-op condos as a set to, let's say, a single family home that is coming up. The big difference obviously is, if you don't want to be surrounded by a lot of neighbors that is like, you're sharing a wall with, then, people buy a single family home, maybe even a multi-family home. But not everybody can obviously afford homes. And second, believe it or not, in our practice, we see people that can afford anything. However, they choose the condo because condo or co-ops have small advantages compared to just homes on the ground. Namely, because you pay the maintenance or common charge in the case of condominium, what happens, this money is supposedly going somewhere and they're going to pay for someone. And what that is they clean the grass, they clean the building, they maybe even can come and do a small repair for you. You don't need to shovel the snow. So those are all advantages of being and paying for that maintenance. However, the disadvantage is obviously you're tight. If the condo decides that they need to raise your association dues or common charges in this case, if majority decides or they decide, that's what it is, because they need to meet the budget. You don't have that in single family homes. You have your own pretty much rules. But at the same time, you're now responsible for shoveling the snow and cutting the grass, etc. Someone buys, let's say, a single family or multi-family home. All we need to do is just to qualify the person. Yes, the property has to, the appraisal has to go through, it has to be in the livable condition. But we don't have that additional layer of being dependent on the project. Now, let's talk about this. If someone buying a condo or a co-op, in addition to qualifying you, we have to qualify the development, meaning the condo and a co-op has to be in a good financial condition. There shouldn't be any structural repairs needed. There's some other things that maybe we'll cover in another video, that the condo and co-ops, but the lenders require condo and co-ops to meet certain requirements for owner occupied. You see, if there's 50 units in the development and 40 of them are occupied by renters, banks don't like that. And I just gave you an example. There is a percentage where they cut it out and say, listen, above that, we're not willing to go. So we are going to record another video to break this a little bit more down, financing differences. But, I'm opening this for a discussion. Please write your comments. Please like this video. And if you have any questions, please feel free to contact us.